Okay, so this week I'm going over what I traded, how I traded, and just overall the statistics for this week. Now we ended, I think it was yesterday, with a loss on the 21st. Today is the 22nd. So yeah, yesterday I went ahead and closed this trade early. I really shouldn't have done it, and I will go over that. It was CZOO. So I bought here, and then I literally sold right here before the spike. And it was because of the news. This one was pumping on Wednesday, and it went from 239 up to 358. Actually 382, 381. And then during after market hours is where I was watching to see if there would be any more activity, and it just kind of died off. And I was thinking, okay, with the news coming in that the CEO was stepping back from his role, Kazoo Group to remain listed on New York Stock Exchange until at least March 20th, that kind of did freak me out. I was thinking, okay, if they get delisted, then obviously the position just could get wiped out, and I didn't want that. So I went ahead and sold early, and it was a mistake. Going into day two, I had it right watching this, and then here's where it topped off all the way up to 541. So I definitely sold early. It is part of the game, part of the business, and it is what it is. I still am up this week. Last week, Rum was one of the good trades that I made, going into 735 and sold at 865. Yeah, bought right here, sold right there. We can take a look at the chart. This was for 312. So we know Rum is Rumble, the video streaming similar to YouTube, a little bit more open to people saying whatever they want to. Instead of taking things down for political beliefs and whatnot. So 312 is where we're looking at right here. So going into the market, opening bell, we had a nice pop, broke support, and then it continued all the way up to 815 that day. And then the very top 921. So what appears to happen is if there's a nice move the first day, it continues on to the second day most of the time, especially if there's good news or something like that that's going to be a catalyst to drive these things further up. And there was for Rumble. Rumble partners with ACP Creative IT on cloud services offering. I seen where they were doing that. They also, the Rumble jumps after U.S. House passes bill on TikTok crackdown. That was a possibility where a new competitor would come in and overtake that market for video. The short format video in TikTok is where it's at, just like it is with YouTube lately. And so Rumble had his chance. Everyone started trading, diving into Rumble stock, and drove the market even higher for Wednesday the 13th right there. So that was a good trade. VWAP or VWAP, we were over that. EMA broke the 200 like I usually trade. If I see something that's popping up on the Trading View scanner, the 200 EMA is being broken by the 20, sorry. Had to double check what I was saying there. The 20 EMA pops over the 200 EMA, and the stock obviously is out and away from that 20 EMA above the VWAP. We are good to go. Ride that thing all the way to the top. And, the break of supports, break of structures is where you want to be watching. These things like to pull back on the first time. Could be 10 o'clock, could be noon, and then continuing throughout the day on up. And what causes that is the news that breaks these penny stocks or things like Bazinga, and all these outlets start pouring content out about Rumble, for an example, and it makes people want to FOMO, fear of missing out. they dive in and they continue to make this thing go up. And as you can see, there was plenty of volume. It started trickling down that third day, fourth day, fifth day. It's kind of broken. On the 20th here, went from 761 up to 8, and now it's crashed down to 735. Will this thing remain at 735, or will continue to find the volume levels where it was at 720, or will it break on back down to the 6 range? Now, this thing does trade, let's see, February around 6. That was a break from $3.42 around January 24th coming into the year. So it's one of those things is, will this thing be a regular stock, or will it remain a penny stock? Anything under $10. The RUM financials, check those out, look at them, see if it's something that could be a long-term trade, and go from there. I don't like to trade long-term trades. I definitely don't want to hold on to something that I don't have any confidence in. And with Rumble being a video format, the one thing that could happen is it ends up being acquired by another platform, Google, to take out its competitor from YouTube. So back to the journal. We traded TLS and NKGN as well. This basically wiped out one of these profits. So, to have, what is that, $4,600 profit week is pretty good for literally, this was a 2-day hold, and then 43 minutes, and the others were 5 and 18 hours. So this was a long-term loss too. I did hold it longer, and obviously, again, I should have stayed in there and waited for that pop at the pre-bell. But I was thinking it was actually just going to die off, especially with the news just being, bad news. But it's not. So anyways, $4,600 for the week. Not a bad week. We did trade TLS. We bought down here. Let's see, 318 right at the bell at 930. And what day was that again? 318. Okay, so this one was riding up. This is another second day. As you can see, the first day it was a low at 315, closed at 398, and I got in around the $4 mark. And I think, let's see, go back to the journal. Yeah, 438. So 28 cents is what I picked up for 6.83% profit. Literally, I got out early, but the goal here is at 5 to 10% profit levels, not to get greedy. And it literally was just a couple minutes worth of trading. And it was pretty much this long candle. I think I got into this one as well, or it followed over to this candle as well. Yeah, 438 was right around there. At 945. Yeah, 957. So maybe this one. What was this one? Yeah, this candle. This was the pre-market, or right at the bell, followed to 9:45, and then 10 o'clock. So in between this area. All right, and so, and just real quick, reading this, I did see the pre-market. There was not really a lot of movement, but there were these gaps, and it was just a simple quick play that I was hoping, okay, it pops off, it jumps, and I got in right, during the candle, saw a big spike, and I knew that there would eventually be a little bit of profit to chase there quickly and get, 5 to 6%. Now, I was actually playing it to 10%, but I went ahead and just closed out and was happy with that one. So NKGN, another one I played. This one was 271, around 221, and then at 226, 5 minutes later, sold out around that 289 mark, 285, so 271 to 285 gives us 14 cents. Not a bad little move there. 27 cents would have been 10%, so 14 and 5%. And so another good little quick 5-minute trade for $1,400. 319. What is this? What did I say? NKGN. NGKN. Wait a minute. NKGN. And as you can see, this should have been a 19th. Yep. $12.21. All right, so right around here, it broke back. This is on the 15 minutes, so let's go. I would have been looking at. All right, so we pulled back to the VWAP, and that's what I was playing it off of. 1221-ish, started going back up. And then obviously you can see that I sold, thinking, hey, here's the resistance right here. If we do not break that, which we did, later on, 1247, we broke it up slightly to 308. Let's see, 1226, 285. 1226. Yeah, I literally got out, a little early, but it was only just a quick trade. I think maybe I saw the pullback and it kind of freaked me out. I should have just played it up to the 292. But again, I just wanted a quick 5 to 10%. And I got the 6-7% right there, or 5.7%, 5.17%. So, not a bad week based off of literally just a couple minutes. This was the prior week, 2 days, but it's just holding on. Minimal work, sitting at my desk, and literally day trading. So if there's any questions, I want you guys to reach out and, ask away. Today is Friday. I'm not really trading, and my loss here was yesterday, Thursday. And I'm just not feeling it. Friday, even looking at the futures, if we take a look at the futures market, look at the E-mini. It's kind of a down day too. You could be playing off the support and resistance lines, 52.90 up to 52.95, 5 points. That's pretty good. Pretty good profits right there. Even if it's 52.97, that's 8 points right there. That's a pretty good day for being down. And the key is looking at the support and resistance zones on anything you trade, whether it's penny stocks, futures, commodities, options. You look at the key support and resistance zones of where liquidity is at, where stop losses and limit orders are, and you'll actually become a little bit better trader just simply by learning those two strategies. Support and resistance. The one I use is by Lux Algo. It is free. It's the Smart Money Concepts. The inputs, I don't think I've really changed much. We go into here. I think I pretty much kept everything the same. I do think you have to check this. So remember that, support or premium discount zones, check those. I changed the coloring from, I think it was blue and reds to green and reds. So anyways, I hope this video helped. Today is just a slow day for me. I'm not really doing anything. I wanted to get a video out to you guys and to show you my previous trades going into the mindset again. It's literally just playing support and resistance zones. Try to come up with some more creative content. I know, this the same thing that I say all the time is check the VWAP. Make sure the EMA 20 is over the 200 EMA. And it's trading it's not, don't make it so complicated. My first probably 5 to 6, maybe even 7 years, it took me a lot of trial and error based off just trying to come up with the holy grail. And even today I've learned, I not up till recently I was trading support and resistance zones, and I should have been doing this the whole time, but it's, we learn from our mistakes. I had a lot of success after the 5-year mark, and even going into the hedge fund when I had it, I was trading based off the Ichimoku cloud or the Ichimoku, the lagging lines, watching it trend into the candlesticks. And then once it broke, I was done trading and everything. And then RSI, MACD, and all that is a visual so that it helps build confidence for your trading strategy. If something works for you and you can do that consistently for a whole month, and you can also tie in risk management and basically put in your stop losses, you can have equal to even maybe lesser wins than you do have losses. But the shorter the losses compared to your wins, that's all that matters. And a good day trader, you hear this all the time, a good day trader is about risk management. The easier or the better that you can get at risk management, your trading profitability and success becomes easier. You start seeing things in the market, the trends that obviously doesn't last long. Like this was a huge sell-off, right? And eventually it had to stop and retrace 50, 68%. And knowing the Fibonacci, I'm not going to throw this at you. I'm not going to say go trade the Fibonacci, but if you do kind of understand the Fibonacci, hedge funds, institutions, all the big people or all the big, institutions and people out there that do control the market or affect these prices do trade off those certain percentage points. Their algorithms are set to that, to sell off or to buy in, whatever the case may be. And that's why you see, your 32.8 or 38.4%, your 68% levels, your 50% levels, and your 100%. Anything over 100% usually becomes either oversold or overbought. And it's time to reverse that trend. And, all I'm getting at is focus on what works best for you. I have taught so many people, and everything that I ever teach them, I always end up just saying, out of all that you can gather from me, other YouTubers, mentors, coaches, experts, advisors, whatever, all the experience that you can get, pick what is obviously working for you and stick to it. I found for me, literally support and resistance zones. Trade, especially futures. If you're trading futures, these E-minis, for every point, they're $5. If you're trading normal futures, the ES, NQ, stuff like that, it's $50. Oil, I think it's 10 or 100. But anyways, for every point, trading literally bounces off of these support and resistance lines. And the closer that these start to shrink, becomes a consolidation period. So like right here, there was a good example yesterday that I was watching, and the support zone was here. You had your equilibrium, and then you had your premium right here, which is a resistance zone. So this was red, this was green. Well, it was shrinking, right? So there's not much space in between here. Well, this was consolidation. And I think this is today. Let's go to a 15-minute back up to yesterday. Okay, so right here to here is what I'm talking about. Like, yeah, it did trade up to here, 53.23 down to 53.10. So a 13-point, move right here. But all this is literally 4 or 5 points, and this is too risky. And I noticed that the support and resistance lines on the 5 minute and the 1 minute. The 1 minute especially was shrinking. They were bouncing off those zones. And I was like, okay, well, that's consolidation. Something big it should be happening soon, because it's in stocks, assets, different assets, whatever the case may be. You have those consolidation periods where you're starting to lose the big buy and sell orders and those gaps, the spreads, and they're starting to tighten up. All of a sudden, now there has to be a new, eventually you have to figure out where, because you have to let it happen, a bigger support and resistance zone, like right here. Will this 52.94 drop all the way down to 52.36? Because all of the buy and sell orders that were in place by hedge funds, financial advising companies, and let's just call them institutions, are starting to shrink now. They've got rid of all their positions. Now they're getting ready to go into next week and have new zones where those algorithms and their orders are being placed, and that's to be known. They're nothing here on the charts today. So Friday, and any Friday, that's why I kind of stay out of the market, just because leading into yesterday, it was kind of tightening up. Today, I knew, it was going to be too tricky to trade. We might have a sell-off. And the support and the resistance zones, again, was too tight. And I was like, okay, it just could go any direction. I don't want to be at a loss even more. So I'm staying out. So what I'm getting at is whatever works best for you, stick to it, master it, and then just compound your positions. If you start using 1% of your capital, or maybe 10% of your capital, whatever you can risk losing, and you trade that, and you start getting good, and you start making 5 to 10%, and you can do that for an entire month, maybe 2 or 3 months after, start compounding bigger and bigger contracts or bigger and bigger shares. If you have a $100 account, obviously, I 10% of that is $10, so it's not very much to use. Being a smaller type of account, I would definitely trade. This is just me, not financial advice. 95 to 100% of your portfolio. You have to, or you're not going to make anything. If you can risk losing $100 and then just next month replace it and use that for practice, that would be good practice for you. That's how you build up a small account. You can also make trades and look for those quick 5 and 10% and do that, and it will add up. 100% in a month becomes $200. 100% of that, if you can do 5 to 10%, it's not going to be easy on you by no means if you're a beginner, but if you can do that consistently, 200 becomes 400, 400 becomes 800, and so on and so on. You now have a bigger account to start trading futures. And then where with futures, there's more risk, more reward. But you also, once you start practicing with support and resistance zones, you're going to start seeing that these things literally bounce off high of highs or higher highs, or the last high and lows, and you can start building a visual of getting into and out of positions. So anyways, I hope this video helped. If there's any questions, make sure you comment. Please like, subscribe to the channel, and yeah, as always, take care and happy trading.